We are now going to look at paying suppliers. Suppliers are sometimes called creditors. Many organisations buy regularly from the same supplier. Where this is the case, you may receive a statement listing all transactions for a monthly period. The statement lists all invoice numbers and amounts owing. It lists adjustment note numbers and amounts refunded. It lists payments your organisation has made, and opening and closing balances. The closing balance is the amount your organisation owes to its supplier. Many organisations pay on this statement rather than individual invoices. The invoices and adjustment notes, however, are still all your source documents in the bookkeeping process. A statement is merely a summary of all of your transactions. In this example, Jessica has sent Danny an inter-office memo with the statement and all the source documents, that is, the invoices and adjustment notes, and details of any payments that have already made. He's asked for Danny to check the statement and other documents to ensure that all calculations are correct. Danny needs to make any corrections required on these documents and then let the appropriate staff member know in the memo form of any errors in these documents. Once Danny has checked the source documents against the statement, he needs to work out how much discount we are entitled to so that we know how much to write the cheque out for. He then needs to complete the attached remittance advice and write our cheque out and return all the documentation to Jessica. So let's take a look at the step 1, which is to check the invoice number 15. Some information here that we need to check are the invoice number, the date, and check that the calculations have been carried out correctly. Once we've checked this information, we need to check that it's been recorded correctly on our statement. We can see here that July 2 invoice number 15 and the amount of $812.50. This amount has then been added to our opening balance, that is $2,500 plus $812.50. So they at Mitchell Furniture now saying that we owe them $3,312.50. So this information is correct. We then need to go and check a source document for invoice number 28. Danny checked the invoice and found that there was an error. He made note of the error on his copy of the invoice. In this example, there were 2 lounge suites at $1,200 each. This should have added up to $2,400. We then add that to the other correct amount of $3,405 to give the total invoice amount of $5,805. So we owe Mitchell Furniture $5,805, not $4,605. We then need to record this correct amount on the statement. We've crossed out the $4,605 and corrected it with the amount of $5,805. This of course then changes the running balance that we owe. That is, we owed $3,312.50 plus the $5,805 we now owe $9,117. The statement then shows that on the 10th of July we sent a cheque for $2,437.50, and they've also recorded on their statement an amount of $62.50. If we add the $2,437.50 and $62.50 together, we will note that they add up to the amount of $2,500. That is, we sent a cheque to Mitchell Furniture for the balance that we owed on their account the previous month of $2,500 less a discount amount of $62.50. Our cheque was actually made out for $2,437.50 and our supplier has recorded an amount of $62.50 on our account, which is a discount which we were entitled to because we paid our account within 30 days of the end of the month. We then need to check our other source documents. In this example, we need to go and have a look at Adjustment Note 31, which is for the amount of $32.50. We have checked that the adjustment note number, the date, and our calculations are correct. and we need to check this against our statement. In this example, the amount was correct. And finally, our last document is invoice number 47 for some goods that we purchased on the 26th of July, totaling $781.50. Once again, we check the invoice number, the date, and that our calculations 3 by $260.50 each total $781.50, and check that this is recorded correctly on our statement. We then check that all of our calculations have added up correctly. In this example, our total amount due now is $7,366.50. If we have a look at our statement terms, it tells us that we are entitled to 2.5% discount if we pay within 30 days of the end of the month. This statement was issued on the 31st of July, and we are going to make our payment on the 5th of August, so we are therefore entitled to a 2.5% discount. When preparing the remittance advice, we record the amount that was actually on our statement, and then we record the discount amount so our supplier can see how we've worked out our final amount that we are sending. We are then going to prepare a cheque for $7,182.35, which was the amount owed on the statement less the discount, and then we are enclosing the amount in our cheque. Most companies do not write cheques anymore but do online banking. It is important to note that companies should still have an approval process in place, which should be filed with your documentation. In this example, however, we are preparing a cheque and sending it in the mail. The information on our cheque should include the date that we are making the payment, the supplier's name, that is, the people that we are sending the money to, and details of the account we are paying. This portion of the cheque is called the cheque butt, and it remains in your chequebook after you've sent this portion of the cheque to your supplier. The portion of the cheque that you send to your supplier must also show the date you are making the payment, who you are making the payment to. It should write the sum that you are making payment of in full, as well as in dollar terms. And it should also be signed by an authorised person in your organisation. You then attach the cheque to the remittance advice and send it in the mail for your supplier to receive and bank in their bank account. If you have any more questions about this process, you should speak with your lecturer.